Good morning, my name is Scott Redler, Chief Strategic Officer of T3Live.com. I'm going to give you a quick little Apple video because I know there's a lot of concern swirling this stock. It's in the media, everyone's talking about it. No one really knows what's going on exactly, and you never know what's going on exactly in a stock. All you have to do is just look at the price action. The price action lately, you've had gyrations. Gyrations in stocks are not good. Gyrations mean that there's big money trying to get out of it. And if you go over the pattern or the psyche of the course of the past month or so, the move from 700 down to 505 definitely rattled investor confidence. And why not? It was pretty fast. It was furious. On the downside, there were a lot of reasons to get out of the way because it broke key moving averages, never showed support, never showed strength. And then finally, you had that move, off the lows that we saw on November 16th. So that was a very important move to judge because you want to judge whether or not that move from 700 to 500 was psychological, was it extreme, was it overdone? And within that bounce we just had, it was pretty methodical back to the 200-day, but then at the 200-day, no one expected, or at least I didn't, the type of move off of that resistance. If you go to the chart real quickly, here is the move from 700 all the way down to that 505. Within that, you had a head and shoulders top right here. You had the left shoulder, the head, the right shoulder. I was really basing it off of the 21-day. That's when I started to get away from it as far as a swing trade, but make it more of an active trade. Here's where you had a little 3-day bounce off the 50-day, broke it. Little bounce off the 100-day. Broke it, and then it just, methodically or fast and furious went to the downside, and the 200-day didn't even pause it basically for, 3 days is not a pause there. So here was that move, right? Here's that reversal. It was methodical. You had a nice follow through, little digestion, and then right into this resistance or right where the 200-day was, it made sense to sell it, right? Nice, almost $90 move to the upside. Let it figure out. Let it see if you could show some commitment. And then you had this 572 area, and it didn't even pause it. Okay, sliced through it really hard. And I think what's important here is you go to this little spot, you go to this reversal on Thursday. Thursday, I know I did a video right there because I got stopped out here. I'm like, I'll try some a little long. Tried some. You could have used a red dog reversal strategy. You could have used an intraday strategy. It opened up weak and then methodically traded up all day. But what happened on Friday, to me, was very disturbing. All right, it opened up with the jobs report. I sold some and then I got stopped out. As it went negative, I was out of the office, maybe even a little bit below it, like 5:45, and it almost engulfed this entire day. You never want to see that, especially into what could have been a double bottom type of support. And now today, it's opening up $6-7. You have a 518 pivot to watch. Then you have the 505. And if you take a look at the macro chart is now showing you, trouble, showing you that you have another, head and shoulders pattern type. Okay, here is your micro topping head and shoulders pattern. And then here you have the left shoulder, the head, the right shoulder. We've talked about this a few times. And look how we're in this lower end of the range now. So if you get a close below, just see the 505, 518, you could see a really fast and furious move down to this 486 area. And then overall, there's much bigger support coming in, all the way down. And I hate to say it, and I know is scary. I don't want to add any kind of fear, but this gap here of like we're in the 440, 435 area is really big. At this point, if you didn't sell or you didn't take some profits, into the weakness here, I hate to see you do it over here, but I would say that a hedge is prudent, some kind of collar, some kind of maybe straight up put buy, whatever your time frame is. And if you're feeling uncomfortable and you're jumping out of your skin, and rightly so, a lot of people did think that they could just stay involved in Apple as an investor, and I'm not saying that it's game over. But this type of movement has definitely taken or battered and bruised the psyche in the stock. I know for me as a trader, if you come back to me, I feel like the pressure's off. During that move lower, I was trying to buy moving averages, play 1 to 3 day bounces. I stayed with the trade from that November 16th low and scaled it and trailed it and used stops. And at this point, I'm not stepping in the way. I don't think that, if you're going to trade it long, you do a level versus a level. I do think there will be some guys trying to press it, below that 505, 518, which is going to be tricky considering it just came from 700. So overall, you have to be very careful here from both ways. Okay, at this point, $200 or so off the high. If you're going to press shorts and that's your game, fine. But just because it's 200 points or so off the high doesn't mean you can close your eyes and just buy it. So use your time frame. be careful, and at some particular point there'll be more clarity, it'll act different, and then we can get more constructive on it. But right now, it has a lot to prove, and it's a definitely tricky trade. If you can't handle it, just stay away. Scott Redler, T3 Live, tune into the virtual trade floor. I'll have more in there. Have a good day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.